back to UniTrader. Today we're going to take a look at the market cycle or the market structure as it relates to the hybrid system. So I said something ridiculous in an earlier video, something about the hybrid. I can't even remember what I said, but I heard it and I was like, oh, that's not even true. So I meant to say something and I said something completely different. So hopefully nobody took that to heart, and I'll explain what I said in a minute. So before I begin, I'm not a financial advisor. This is not financial advice, and please be careful with anybody in the comments. Again, it's only happened on one of my videos, but just gotta say that I will not give you my WhatsApp number. All right. So what I also had a comment regarding this indicator about the PVRA system, and I was calling it the hybrid, and the gentleman, I believe it was a gentleman, he asked if it wasn't the same thing, and it's the same indicator. So the difference between the hybrid and the PVSRA, they're both pretty awesome. Like the PVSRA is just using this indicator and the volume tick indicator, right? But it's on a different platform. It's on MT4. So this is the Trader's Reality version for TV, TradingView. So this is all that their system entails, and then you have setups for it, right? And mainly you're talking about the Dragon, which is the 50 EMA, correct? So the big difference is that the difference is that the hybrid uses Steve Mauro's market maker strategy. So the market maker strategy is, you know, that pattern. Well, I'm gonna have to hide all this stuff, but you know, it's basically you put in a W pattern, then you do a leg up, another leg up, and then you put in a peak formation, and then you come down. To rinse and repeat. You do another peak formation down here, which is, you know, your peak formations are W's and M's, and so on and so forth. We'll get into that in a second here. So the Steve Mauro, I mean, there isn't a better way to understand the way the modern markets move. As far as I'm concerned, I've not seen anyone who has a better take on it or explains it better. And the big difference really is that we are now trading against bots, and we are trading against liquidity providers with bots, right? In the old days, exchanges didn't have liquidity providers, but now they all have liquidity providers. So these are the guys, again, with billions and billions, the guys we call the market makers. And they're the ones that will be filling your positions in any trending market. So when we get into these sideways sort of markets, it's a little bit tougher to spot these patterns, especially on the macro time frame. But on the shorter time frames, the lower time frames, you can definitely find this stuff still. So for example, and this is the same example I gave the other day, we have this insanity here, which makes no sense to anybody, but still, you know, you pretty much had one move up. Here's a level, and then you do an M formation here. So, nope, I already had that. So let's say one, we do a little bit of consolidating here. There's your level 2, then we have an M formation here. We come down here, very light consolidation, another move down, very light consolidation, and there's your third level. Here's your W, and then 1 and 2 to the top. So it can get a bit ugly, right? And what I mean by ugly is that nothing is perfect. So we'll go over the perfect pattern, and I'll just move this over to here. So again, the perfect pattern would be you put in a peak formation, which would be, if you're coming from the lows, it would be a W. Then you would put in another move to the upside, another move to the upside, and then you would put in your peak formation. And then you would put one level down, two levels down, three levels down to repeat the process. Peak formation, first level, second level, third level, peak formation. So this is where, knowing your assets is very important. Understand how they like to operate, because they don't all move the same, right? So you'll notice that this pattern on Bitcoin on the larger time frames, oftentimes you'll only get two moves up. So they would label this would be labeled level 1. This would be level 2. And then the peak would be your level 3, right? Let me just move that over. So there's level 3, right? So these are your levels. But a lot of times you'll find that you only get two levels up. So it's very important to, understand that they don't make this game easy for us, the market makers. They don't, you can't exactly figure out what they're doing all the time. And they're pretty darn good at what they do. And they've got tons of funds to be able to handle situations that you and I can't handle. So if we look, like, let's take this out to the daily time frame. And you can see these M formations. You can see another one here, right? You can see the W here. Here you can also see an M formation. So the real thing to start to understand if you want to get into swing trades is looking for the peak formations, right? Peak formation, peak formation. Over here got a little bit trickier, but you can find them. You can move over to maybe the weekly chart, and that is, again, if you are looking for swing trades, right? So over here you actually see this M, where on the daily you didn't see it, right? And again, one move up, one down, a little consolidation, move down, but this is going to be your level 1. And some people will argue with me. That's fine. I am not the end all and be all of anything. But to me, we moved up. This is where we put our high in. Hey, come on, magnet. This is where we put our high in. And then this is where we broke that level. And this would be level 2 to me, would be right here. And then from level 2, we don't really retrace that much. We put in this M formation. So a lot of times, it's not going to do 3 levels, but that is the philosophy. The theory is that. So that is on a macro scale. It's on all scales, really. You can look for that pattern on every time frame and you'll find it. The shorter or the lower time frames, it's going to just have a little bit of a different cycle, and that is really because the market maker system is really it's formulated for day trading more so than anything else. And what I mean by that is it's based on the sessions and also the week. So I shouldn't say day trading. It's based on what happens in a single day, and then you translate that to the week. So what are we looking at? What am I talking about? This sounds nutty, but I will try to make sense of it. Okay, so the week, again, on this system, and it baffles me as to why they do this. I've never heard a good explanation as to why they do this. But honestly, I'm at the point where it doesn't even really matter to me. So I'm just going to chart. Oh, I'm going to chart out a quick rectangle here on Saturday at 10 o'clock GMT zone, GMT plus 1. The high from 10 until 6, you are going to chart out the high and the low, and this comes on the indicator, right? That's just the psychological levels. So psychological high, psychological low, and that is what it is for this week. So it's a pretty tight range, actually, pretty small range in that zone. So the theory is that what the market makers are going to do is they will range in the Asia session, and then they will start to give off signals of something that is usually false. So here we break out of the psychological level. If we got people shorting here, then they turn it right around and they rip it up. And this is just the this is what they would call the initial induction, and then London would break up to the other side. Now this happened, you know, this happened yesterday at 6 o'clock GMT, so London wasn't open yesterday, right? But this is for the day, okay? Because every day this is how they're gonna break out of the Asia session, and these psychological levels won't change tomorrow, right? So this is then what they would call the false move. Okay, let me just get out. Now I'm out of there. So in this area here, they're just collecting volume. They're basically just collecting liquidity, stopping people out, getting people in, stopping them out again. Then they make a move, an initial induction move, and then they'll rip it to the other side. And this is actually known as the false move. Now, you can definitely trade this, but I would not do it on a Sunday at 6 o'clock, because there's just nothing, like the only thing you're really playing with is fire, as far as I'm concerned. But a lot of people trade it. I know a lot of people who trade it, and they do quite well. Like, you can't really knock them for it. So after this induction phase, if you need to take notes, now's a good time. So this is the just the session. We have this initial induction phase, and then we have the breakout that goes to the other side, and this would be classified as the false move. And then what you would want to see happen up here, instead of this sort of quick rejection, but this is going to be part of it too. What happens is they'll start working this area. They'll start ranging in it for a few hours and start to get people kind of feeling pretty bullish about this. And this is what we call working the high of the day, or if it had gone the other way, it would have been working the low. And then it'll do like a bit of a fake breakout, and that is, come on now. And that is where you would want to get in on a short position, and then this would be called the reversal. And what the market makers are going to do, because especially if there's vector candles here, green vectors, what they're going to be doing, they got all this volume, they then turn it around, people start getting bullish here and they start buying, right? So the market maker is filling his shorts all the way up. He's consolidating here, getting more liquidity in here, getting more people to commit, hopefully to long positions, and then he rips it down. And he will cash out all of his short positions that he had been building here, right? So this is the reversal, and on a weekly time frame, it gets really interesting and plays out quite a lot. What you would be looking for is this pattern to play out over a week. So on Saturday they start building this up, right? we come up, right? We have the initial induction, we come up, we range up here, and then the reversal will come around Wednesday or Thursday. And then Friday is just them collecting profits, because once it starts going haywire here, then they're going to have to start filling shorts as well. So they'll start building their longs again, and then rip it up and take profits on those longs if they have to, or if the liquidity is better looking lower, they'll might drive price down. Who knows? So in a perfect world, this is very easy to spot, right? But we don't live in that world, unfortunately. So right now we have just begun a weekly cycle. We had for the day today, we've had the initial induction. Now we have uh, the the session breakout, which is supposed to happen around London, but it happened last night at 6 o'clock again. And Asia actually brought it back down, and now London is kind of moving it back up. Not hugely successfully. It's not doing a great job. But today's a bit of a weird day again. We've got news coming out, so be careful. This is not a good time to be trading, actually. Wait till after the news comes out, which is actually coming out 15 minutes after New York Open. So I'm going to leave this for a second. What I'm going to do is turn on my indicator. So I have cleaned everything up, right? All I have is the EMAs and my candles open. All right, I've closed off all the other levels just so that this is not very noisy. And I'm just going to turn the candles off so that we can just look at the EMA and draw out how we would expect this to happen, right? So if you actually like look at this, I mean, it's quite beautiful without the candles. But so let's say we put in here our peak formation, and then we break the 50 EMA and we start consolidating here. And what we're looking for then is a test of this 50 EMA to then come back down and form our level 2. And here's our level 2. We consolidate around here. Consolidation still, come up, test the 50 again, rip it back down. And there's our level 3. Consolidation. And it rips back down. So again, the reason we're going to call this level 1 is because this peak here, which is the middle of our M, sorry. All right, so here's our M. Once we rip out and take it down, that's going to be our level 1. So you can see we ripped out, but if I turn the candles on, just so you can get a real good understanding of what I'm saying, we actually, in this zone, we never took this out. I hope I'm not confusing you right now by going back and forth from the candles. So this is still within this zone, and it's not considered level 1. This right here, level 1. So there's your level 1. Again, we consolidate, we rip through, we come down here. Here's your level 2. And I'm actually going to use a box for this just to highlight. When I say level 2, you know, it's going to be this whole area here. So there's your level 2. We're consolidating here. We rip it down, and here is our level 3. So right now we would be hoping for, operative word being hoping, for a W to play out of some sort, right? But we didn't get that. What we got was a V shape. So I'll turn the candles back on. So we got this V shape, right? So no W down here. So that's another potentiality, right? But you see on the 1 hour time frame, these three levels work out really well, and you have to get good at reading these levels to understand where you are, because if you're on, let's say, a first level down, you can take a long scalp. If you were to get a good signal, like this is a pink vector, if we got a green vector or a blue vector here, that might be a good indication that we're going to go back up and retest the 50 EMA. Now, sometimes it doesn't come to the 50 EMA, right? Because again, we don't live in a perfect world. So let's see if I can find an example. Well, I mean, even here, we break above, we put in this W, we finally rip it up. Here's our level 1. We rip past it again, level 2, come back down, and level 3. But we never actually hit the 50. We come into the cloud a little bit, and you'll see there's many times where we don't even come back to the cloud. Like it's so directional. So if it's really a raging bull market, you're not going to find that retest of the 50 all the time, okay? But that is ideally what you want. So let me just turn this candle off again. The candle's off. So really what we would want in an ideal world would be, we come down here, we put in our W, we take the W or break it, right? We break this level, come back and retest the EMA to then fly back up, right? And so then you can start to really see strategies, how to get in on this, right? Like I said, Tino from Traders Reality, he's got that brilliant graphic that he uses. That is basically this. So this is a phenomenal entry point because you've taken this level, so you're expecting a rise up to complete your level 2, right? And then if this comes back this steeply, it really shouldn't break level 2, or else you could be looking at some danger zones. All right, so let me turn my candles back on. So right now it's kind of like a bit of a tricky situation, right? But this is what you really want to get good at, is reading these peak formations, these M's and these W's. M, sometimes like this is a pretty ugly looking M, but you're off the 50, you come up, you would expect that there would actually be more move to the upside. But there's a couple of things here that we have to pay attention to. The major one is that, first of all, we're in a bit of a bear market. And when I say a bit, that's a favor. And secondly, here we are hitting the 800 EMA, which has been the arch nemesis of Bitcoin. Look again, for this whole bear market. So yeah, we'll come above it. We'll close a couple 1 hour candles above, and then we just lose that level again. Now, right now we're starting to really close up here, so could be either way. It could really shoot up and try to make a go for it, but I'm just gonna put this out there. So this, I mean, let me try this from here. We could be looking at this as a W, but it's a bit of a wonky W, right? But it is a W. So we haven't broken out of the zone. Well, actually we did. I mean, we did. So this you can classify as level 1 from here to here. Then we're just ranging. Once it starts coming back in here, getting this sort of the touches, just wicks, that's fine. But if we had bodies close below this level. Let me just put a different color on that. See if I can make it pop. All right. If we had closed a candle below that, it kind of kiboshes the whole level, and we pretty much did. Like there's a couple that close below it, but never a full candle. So arguably level 1. This is definitely level 2, if this is level 1, of course. But we might not get a level 3. So what's going on here? This is actually starting to really turn into a potential M here. So let's see where this goes. This could be the reversal pattern that's setting up for the midweek reversal. And just because it's known as the midweek reversal and we expect it to happen on Wednesday or Thursday, a lot of times on Bitcoin it actually happens on Thursday, it doesn't mean that that's exactly, it's never set in stone. These guys don't give us the exact same patterns all the time. That's not the way they work, or they wouldn't be making money and we would. And they wouldn't be called the market makers and we wouldn't be called retail liquidity, right? So that is the difference between the PVRSA system, which is based on mainly setups off of the 50, and the hybrid system, which is the PSRA system, definitely incorporating entries off of the 50, but we're always looking at this market cycle to figure out where we are in space and time and where we think it's going to go next, right? And the beauty of it is that it's just going to help you really understand the way these markets are moved, and you can stop using the word manipulation. So many people spew out that word, manipulation, manipulation. Everything is manipulated, you know. You've been manipulated since you went to school. You've manipulated everything in your life, because that's how we affect change, and that's how we get things that we want, things even that we don't want sometimes, many times, if you manipulate the wrong way. So it's not a bad thing. It's just understanding the thing, right? So the whole market maker principle is to piggyback with the market maker, understand what he's doing, and when you see him, follow him, right? Except for the fact that he's got a lot of money, and even if you're relatively wealthy, you are not market maker wealthy, right? So we can't, for example, afford to be, well, that's a bad example, but let's say we've got these vector candles here, like this is him opening longs, or her, but the market maker here is opening longs to fill in these shorts that are going to move this all the way down here. So let's just take a quick price range to the wick of that vector. That's 9.9%, which is insane. If you're a 10x trader, you would be pooping your pants, because you would be 99% to the liquidation point, and that's only if you took a well, let's say you got in on these vector candles. I generally trade with about 10x, 13x max, but so it's pretty wild the way they really customize these moves to crush as many people as they can, right? So be very careful. Be very careful and understand these levels, right? Level 1, consolidation. Level 2, consolidation. Level 3, no consolidation this time. But that's what we would expect, would be this W pattern to be put here. But no, just straight up. So what's the important thing here is to understand the way they're manipulating it, and then we look at the PVSRA and the vector candles, And that really gives us a good hint, right? So huge volume candle here on the 1 hour, massive. Look at this tick volume, right? A big wick down, and that's a huge indicator. And then we had a big wick up, so you know that the market maker is not wanting to let price go up or down really here, but it's stopping. And why is it stopping? We're just going to sucker in a few more people to go short, and then once this blue vector candle comes in, that's a pretty good indication that they're going to go cash out on their shorts. And we still have these vectors here to reclaim, right? Because guaranteed he's got positions, or they, the market makers, have positions open here. They've got longs that they opened up in this section, and we have, oh no, hopefully taken profits on our shorts. If you haven't, you're nuts. And so here, this is why it's also a bit dangerous right now. What are these guys going to do? We've got little green vector body here, hardly anything. But it really depends now. Do they want to come back and claim this blue vector fully? Or is there a huge pool of liquidity waiting above here or below here that they're looking at because they see all the orders, right? So Bookmap is a great tool. It is seriously energy draining. Like I generally don't have it open because it is just a computer killer, man. My CPU just dies. My CPU, my Mac is, the fans are just going nuts. So, but Bookmap, check out Bookmap. It's a relatively free resource, especially for Bitcoin. If you want to look at traditional markets with it, it definitely costs money. But for Bitcoin, for some reason, it's free. You can also, there's also a free Bookmap YouTube channel actually that the guy's just always got Bookmap on 24/7. His CPU must be just dying of heat. But anyhow, so that is it. So basically you have, yeah, we've got our that pattern that we're always looking for, and it's never going to be this easy, you know. It's never going to look like a perfect W and then a perfect sort of A shape, but that's what you're looking for. A's and M's and then V's into the W again, and rinse and repeat. So yeah, this is this is definitely the pattern we're looking for with the Steve Mauro market maker system. That is not all there is to it. So the weekly structure is kind of the same. You've got this sort of idea happening. You may not find it as easy to spot the levels on some time frames as opposed to others, but it's all really the same. Like if you think about it, it is really just, well, that's not what I wanted. It is, oh man, it's really just this, you know, on a weekly level, on a weekly time frame. But then inside of here, that's where you would be looking for the patterns. So as the week does this, oh man, this is where you would be looking for this sort of pattern. Like that. Come back down, level 1, level 2, level 3. Oh. Peak formation, level 1, level 2, level 3, peak formation. So in terms of swing trades, You know, you use the days to understand the weeks, and you use the weeks to understand the months. And you are still looking for the same patterns. You're still looking for these M's, you're still looking for these W's, but you got to use different time frames sometimes just to find exactly what's going on, all right? Then you have also the resistance levels that we talked about already with the PVSRA, with the Trader's Reality, sorry, template. So that's already been sort of explained, right? But another thing that actually I should mention are the resets. So many times when we have these sort of crazy, these crazy fast moves, and then we come back and we take out, so this was level 2, right? Level 1, consolidate, level 2. Let me move this back down and clear this out here. And guys, feel free to critique me. I saw a comment by one guy that said if I speed things up a bit, my channel will blow up. And I don't really do this to have a big YouTube channel, so it doesn't bother me. I started this specifically for one person uh, who is very dear to me. So doesn't really matter. If you want me to speed up, though, say something. Or any critiques you have if I'm doing stuff, let me know. I'll address it if I can. So resets, right? So we have our M here. Again, here's our level 1, consolidate, level 2, consolidate, level 3, and rip up. So a V-shaped recovery can oftentimes indicate a reset of the pattern. So instead of us doing a 3 legs to the top, because this move is so fast, you'll see these often get reclaimed really quickly. So the reason it would be a reset and not just the formation of another W is because we've taken out level 1, level 2. I mean, this move took it all out. So it's a bit of a weird move to read this one. And then you could actually argue that this is an M forming right here again. So could this be a peak formation? We're coming down, we're ranging. So until we actually take this out, you know, it's a bit of a tricky beast right now. We got to claim this level and then see if we can figure out where we are in that cycle, okay? I'm going to leave a link below to my Discord channel. If you want, join. I've got some resources for this, and I will post it all there. All right. So that, I believe, is about all that I really wanted to talk about. Yeah, you will have to, you know, dive into this a little bit. Look for stuff. I really never intended to do too many videos on this system, but I'm getting asked questions about it, so I'm doing it. Sorry, Tino. Love you. Shout out to Tino at Trader's Reality. Go check out his channel. He does live streams every Tuesday, Wednesday, Thursday for New York Open. Which, if you like energy, high energy, and want to hear it fast, Tino is the man. And he's really an amazing trader. So yeah, hope you guys are well. Be safe, and I will see you on the next one. Any questions or comments, let me know, and I will respond. All right, guys. Thanks. See you on the next one.